Britain did not conquer the world with weapons. It conquered the world by indebting it. Wars were not won by generals, but by bankers, and that system is still standing today. They told everyone that the British Empire was built on ships, armies, and colonies. But the true engine of global dominance was far less visible. It was hidden behind marble facades and mahogany desks. It was an extraordinary financial system, a system that silenced power with debt and turned money into empire. Britain did not seize control with muskets and cannons alone. It seized control through financing. The bankers in London sought to use war, trade, and even famine as extensions of financial expansion. The story of how Britain financed its global dominance through bankers is the story of how money and power converged at a single point. The same system still continues to shape the world we live in today. To go deeper, we need to look at the 17th century, a time when England had not yet emerged as a vast empire. At that time, Spain and Portugal possessed overseas territories far from their homelands. France was economically developing. The Dutch Republic stood at the center of global trade with its naval superiority and advanced financial structure. England, by comparison, was smaller and constantly struggling with financial problems. Wars against France and the Dutch drained its treasury. Kings began borrowing and repeatedly fell into default, losing the trust of creditors. By the late 1600s, England's credit reputation was in very poor condition. Without money, you cannot supply an army. You cannot maintain logistics. You cannot build a navy. You cannot project power. In 1694, something happened that would completely change Britain's destiny. Parliament approved the creation of the Bank of England. The idea was simple. Wealthy investors would lend money to the Crown to finance the war against France, and in return, they would receive regular interest payments. To manage this system, a central bank was established, an institution capable of issuing money, holding deposits, and guaranteeing the tracking and repayment of these debts. Beneath all that paperwork lay a revolution. The Bank of England transformed debt into a state-backed structure. It converted the unreliable requests of kings into tangible, tradable securities. For the first time in history, the English state began borrowing continuously and on an unprecedented scale, while reducing its borrowing costs. This was the empire's secret weapon. With stable public credit, Britain could continue financing wars even when rival states went bankrupt. While France, Spain, and even economically strong Holland struggled under high borrowing costs, Britain relied on its expanding bond market as a constant source of funding. War had become a monetary competition, and Britain had learned how to play the game. Consider the War of the Spanish Succession in the early 18th century. Despite appearing to be a small island nation, Britain sustained armies and navies for more than a decade. How? Not because it had more natural resources than France or Spain, but because of the endless flow of credit enabled by the Bank of England. Investors recognized that government bonds were a safe haven. Profits from trade and industry guaranteed consistent repayment. France, by contrast, repeatedly defaulted. Confidence collapsed, and interest rates soared. Wars were always associated with soldiers and weapons. But the decisive factor was the bond market. By borrowing, Britain could endure wars longer than its enemies. Throughout the 18th century, this system only grew stronger. During the 7 Years' War in the 1750s, Britain undertook one of the largest borrowings in history. It raised around £100 million to finance wars in North America, the Caribbean, Africa, and India. an astronomical sum at the time. France, despite being larger, both economically and territorially, fell far behind. The war pushed France toward bankruptcy and laid the financial foundations for the crisis that would eventually trigger the French Revolution. Britain, meanwhile, emerged as a global empire. More importantly, government bonds created a wealthy investor class earning steady interest income. War was no longer just about patriotism. It was about financial maneuvering. But war was only half the story. The other half was trade, and at the center of trade stood the bankers. The 18th century saw the rise of joint stock companies, most notably the East India Company. This was no ordinary trading company. It was part corporation, part state, part military machine. Investors in London expected dividends from spices, textiles, and eventually opium. But these profits were tied to conquest. The East India Company built private armies. It bribed local rulers. It collected taxes across India. And these revenues flowed back to bankers and bondholders in London, enriching them further. A financial cycle emerged. Britain borrowed to fund wars. Victories expanded trade. Trade generated taxes and profits. These revenues serviced the debt, and the successful repayment encouraged even more borrowing. Britain knew exactly what it was doing. A revolving system of credit, trade, and conquest had formed. Admirals and generals appeared to win wars, but the real victories belonged to bankers. By the early 19th century, this system reached its golden age. Consider the Napoleonic Wars, more than 20 years of continental conflict. Napoleon's France was militarily strong but financially fragile, relying on plunder and forced contributions. Britain, however, could raise funds from London's bond market almost at will. It borrowed more than £600 million. At one point, interest payments consumed nearly half of government expenditures. Yet investors continued lending because they trusted Britain's industry and trade. They were right. Britain defeated Napoleon not only on the battlefield but financially. But the story goes even deeper. Financing the empire was not only about defeating rivals, it was also about consolidating control at home. The burden of debt was paid by ordinary people through taxes on tea, sugar, and other essentials. While common citizens paid more for daily goods, bondholders enjoyed steady returns from interest. Over time, bankers grew even more powerful. They began influencing government decisions. Economic history teaches us a simple truth. Money and power are not separate forces. They are intertwined. Britain mastered this system and built an empire upon it. The foundations of today's financial system, credit markets, bond markets, perpetual debt, were shaped in that era. If wars today are financed by debt, if investors profit from crises, it is the same system. Only time has changed. Britain may no longer rule the seas, but the financial architecture it created still shapes the world. The real question is this: who controls this system today? Are we merely participants in it, or are we trapped within it? History suggests the latter. If there is one lesson to learn, it is this: financial literacy is not optional. It is necessary. Understand how money and power interact. Examine what lies behind endless debt. Observe who turns crises into opportunity. History does not repeat itself exactly, but if you fail to understand it, you will be the one crushed by it. If you see events differently now, you are in the right place. Subscribe. This is the Financial Historian. The answers are hidden in the past.